What's up everybody? Welcome to the Stocks channel. My name is Corey and today we'll do weekly chart technical analysis looking at all of the indices, the VIX and Bitcoin, and we'll try to answer the question, is the bear market over? First up, let's take a look at a weekly chart of the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Alright, so we could see that we did have a very bullish week in the SPX, and we finally have a condition where we have the higher low and higher high. So this is the first time in the year 2022 that we have been able to draw an upward trending channel. Now you can see bigger picture, we are still in the downtrending channel, and we're going to have a very critical test of resistance in the very near future right around SPX 4040. If we get that bullish breakout, it is very likely that this bear market is over. And if you look, if we just measure from the highs to the lows of this year, we did drop almost 25% from the high to the low. So some may argue that is not a deep enough bear market and we need to go all the way down to 3,500. And while they may be right, nobody knows for sure exactly where we're going in this market. So don't believe anybody that tells you there is no way that the bear market is over and we have to go lower from here, because nobody knows for sure. The only thing we can do is follow price action and trend. And right now the price action and the trend in the short term are telling us that we are in an uptrend and we could be breaking the downtrend once we get above 4040. So this scenario where we get up to 4040 and then get rejected and come down and make a brand new low down near 3500 is still a very valid scenario. But the problem with just assuming that is going to happen is that it is not objective. While you may believe that that is coming, there is no way looking at this chart that we know we are going to 3,500 until we break down below 3,800. So if you're waiting for an objective sell trigger, you are waiting until the SPX breaks down below 3,800 before you ever assume the SPX is heading to 3,500. I think we can all agree, looking at this chart objectively, that this is the first time all year that we have seen strength in the price action and price maintaining a base and actually breaking out above 3,900. There is no way breaking above 3,900 after a higher low can be viewed as anything other than bullish. Even though you could argue this is just a bear flag before the next leg lower, there is nothing objectively confirming we are going down for that next leg lower unless SPX breaks down below 3,800. So that is the way I view this market, and that is how I follow price action. So I will not be bearish on this market for the next leg lower until SPX can close below 3,800. Looking out and zooming back to the March 2020 low, everybody was still bearish after the market bottomed, and this entire bull rally, those people stayed bearish and said there was no way the market was going to make a brand new all-time high, and the market humbled them very quickly because that was the fastest recovery that we've ever seen after a bear market. So keep in mind, people that think they've seen everything in the market always say they've seen everything until they see something they've never seen before. So do not believe anybody on what they believe in the stock market. Follow the price action and follow the trend, and you will be much better informed than the person who thinks they're an armchair genius. You could use quarter 2 earnings and quarter 3 guidance or FOMC or inflation or all of the problems with the economy, but none of that is going to help you become a better trader. The only thing that is going to help you trade better is learning how to read charts and doing exactly what the chart is telling you. Right now, this chart is telling us we're in an uptrend in the short term, and there is no reason to expect anything other than an uptrend until we break out of the uptrend and break down below that critical support. If we break out above 4040, we'll very likely test the weekly 20 simple moving average, and the next critical breakout above that 3,900 breakout, which we already have, will be the breakout above 4158. Once we break above 4158, the bear market is likely over. We have the bullish breakout of all of the higher highs needed to see with the price action, and that gives the bulls a lot of room to work with to form another higher low, because you are always going to see the market moving in waves. You are never going to just go straight back up, so do expect there to be plenty of volatility. The question is whether or not that volatility allows SPX to close down below 3,800, or whether the volatility stays above that support as we see buyers stepping in. That is going to tell you everything you need to know in the market. So if you see buyers at 3,800, that is bullish. And if you see price slicing down through 3,800 like it's not even there, that is extremely bearish. So that is by far your most valuable risk level moving into the week ahead. Even though there are other risk levels, if you do want to use a higher risk level, that's going to be up here right around SPX 3,900, which is the bullish breakout of the higher high. So your two critical risk levels are 3,900 with the strongest and most critical support at 3,800, because if we break that, we are likely still in the bear market and going down for another leg lower. So keep it simple and follow price action, and do not listen to anybody about their views on the market. Let the price action tell you where we are going from here. If you follow price action, it allows you to completely block out noise, and you know exactly how to trade this market without ever opening a single news article or listening to a single earnings report. If the earnings are good and everything is starting to look better, we are going to blast through 4040, and if things are horrible and looking worse, we are going to blast down through 3800. That is how you follow price action and not noise, because we are going to see it in the price action whether it's bullish or bearish. We don't need to hear anybody's opinions or what they think's coming. On the bear bull survey, you can see that we still have extremely bearish sentiment with over 42% of the people that are still bearish, even though we do have a bull trend in the short term. So when you start getting bearish sentiment and the chart is starting to look more bullish, that is usually going to add fuel to the fire as people continue to short the uptrend and then get short squeezed, and they are basically just throwing fuel on the fire, adding more fuel to the bull run. So if you continue to see the bearish sentiment staying high as the market rallies higher, that is likely going to allow the market to become more impulsive and actually see a stronger bull run. So do keep in mind to the bearish sentiment, because historically when we get bearish sentiment like we've seen this year, that does typically call a bottom, and we do usually start going into a bull run shortly after. For example, if you go back to this chart from macro charts, you can see that when we get this historical low bear bull survey reading where everybody is becoming bearish, you look at this chart, that is typically near the bottom of the market, and we have already had this reading this year, so that does increase the probability that we did put in a bottom and we're beginning to rally off the bottom. So as we see the bear bull survey shifting over to bullish, because nothing changes sentiment faster than price, that will cause more bulls to step in, join the bull rally, which will only make the bull rally more sustainable and more likely to succeed. So the definition of following price action is telling you that while we're in the uptrend and while we have the bullish price action, we need to stay bullish, because we don't want to be caught on the wrong side of the trade just because everybody is bearish and we want to join the majority and we want to be a part of the crowd. Remember, the crowd that screams the loudest is usually the most wrong, so we do still have way too many people that are bearish in my opinion, and we now have a bullish chart, which is the completely opposite of what you would expect. When you get a bull trend and bullish price action, you would expect to see way too many bulls, but we are still in the position where we have way too many bears. Jumping over to the NASDAQ 100 NDX weekly chart, we can see the same exact story as the SPX, where the first time this year in the year 2022, we can now draw an upward trending channel with a higher low and a higher high breakout, because we did close above that resistance at 12,125. The next critical resistance breakout is going to be back above this previous high at 12,700, and then we will need to clear this very critical resistance at 13,300. So the critical support for the NDX to hold above is still down here at 11,768, because as long as we are above that level, we are still in an uptrend, and we will need to break down below that support to get the next bear market leg lower. So set your risk on the NDX at 11,768, and if we break below that, it is very likely that we're heading down to 10,589. I continue to tell you it does not get any simpler than that. You don't need anything other than price action to know where the market is going from here, because we are going higher until we lose these critical support levels. If you want to use a critical support level that is closer to the price action, that is going to be the previous high right around 12,100 to about 12,125. You can use that as your risk level, but the most critical level is still down there at 11,768, so do not overcomplicate it. It is really that simple, that if you are following price action, you are staying bullish until we lose critical support, and then you are getting ready for that next leg lower that is substantially lower. This allows you to manage your risk, and it allows you to stay on the right side of the trade and know very quickly when you're wrong. So I do suggest following price action and not the majority of the crowd that still thinks we're in the bear market and we have to go lower. They may be right, but they're more than likely wrong, so follow price action and ignore what they're telling you. In the Dow Jones, you can see the same exact story, where the first time we're drawing an upward channel with a higher low and a higher high, because we did get that bull breakout above 31,500. You could use that as your critical risk level to get more risk off if we break below that level, but the strongest support level that we need to hold above is all the way down here at 29,800, because if we lose that support, we are very likely closing the gap at 28,500. If we go beyond that gap, we can go down for the next leg lower at 27,583. But the most important thing to keep in mind is that you are getting more risk off if we lose that critical support at 31,500, because we're more than likely coming back down to retest the low at 29,800. But for the time being, we're in an uptrend until we're not, because we have the higher low and the higher high, and we also have the uptrending channel. So as long as we're trending higher, we do want to stay bullish above critical support. On the Russell 2000 weekly chart, you can see we have the same story of the higher low, higher high breakout, and the critical support for the Russell 2000 will be at 1769. And if we break below that, the next critical support is at 1700. And if we break that, we're coming down to 1578 and 1536. I suggest staying on the bull while we are above the breakout level, so use that as your critical risk, because we are in an uptrend in the short term, which means we may have seen the bottom and we know our risk is very well defined at our risk levels. It doesn't get any simpler, so don't overcomplicate it. Follow price action and that will guide you on where we're going from here. On the VIX weekly chart, we see the VIX continues to crush and we now have a negatively sloping 20 simple moving average, and we did close the week below 24, and we still do have a rising trend line of higher lows, so there's still going to be support in the VIX right around 21 to 20. That means the VIX is likely going to continue to trend lower until it gets to support, and once it reaches VIX levels of 20 to 21, we could see another spike in volatility. But by the time we reach VIX levels of 20 to 21, we could be coming from a much higher high, which means the pullback and the spike in volatility could still put in a higher low. Remember, bull trends are higher highs and higher lows. We're not saying because we're in a bull trend, the stock market will never pull back and we'll never see another red day again. We are simply saying every red day will likely lead to a higher low before the next higher high. Get in the habit of following price action and understanding the trend, because if you just think that a bull trend means you go up every single day, you will never be a successful trader because you have unrealistic expectations. We're more than likely still going to see plenty of volatility, but as I have just shown you on the charts, everything is showing that we are currently entering bull trends, and we are now seeing the VIX getting crushed down below 24. If the VIX starts spiking back above 27, we can get a lot more cautious of the bear market continuing in that next leg lower. On Bitcoin's weekly chart, you can see that Bitcoin did bounce off of that support at 19,000, and we did get the first bullish breakout above our resistance trend line because we did break the downtrend in the short term, which did require that breakout above 22,000. From here, we can run all the way back up to retest the stronger resistance trend line and resistance right around our weekly 20 simple moving average at 30,000. So Bitcoin is also very simple right now because you are staying bullish on Bitcoin as long as it's above 22,000. And if we break 22,000, we'll likely come back down to retest support at 19,000, and below 19,000, we'll likely make that next leg lower at 12,000. There is no way you should be expecting 12,000 until we break down below 19,000, and as long as we're above 22,000, it's more than likely that we're trending back up to 30,000. So take it day by day and just understand while we are above 22,000, you are staying bullish on Bitcoin, and it really doesn't get any simpler than that, so there's nothing else that needs to be said about Bitcoin. On the ARKK ETF, you could see zooming out here that we are still below our support trend line, so we are still in the bear market, and we are getting very close to trying to get the bullish breakout above $48, which is going to tell us that the bear market in ARKK is likely over. In intra-week, we were above that resistance, but we did close down below that level to finish out the week, so we don't have any clear buy signal on ARKK at this time. However, when ARKK closes above 48, we will be out of the bear market and we will likely see ARKK entering a bull market, but we cannot jump the gun and say that we're going into the bull market until we see that in the price action. The other possibility is that ARKK is still in the bear market, and this is the perfect place to short it. So as long as it's below 48, you can stay bearish on it, but as soon as it starts breaking above 48, you instantly need to get more bullish because we are likely going higher in this ETF. So jumping back over to the S&P 500, there is no other way to trade this market than following the price action and the trend, and right now we are still in a bear trend in the longer term, but in the short term there is some evidence that we could have just put in the bottom and we're starting to enter a bull trend. For that reason, use that critical risk level on SPX at 3,800, and while we are above that level, I do believe that you need to stay on the bull, or you can use the risk level at 3,900 if you don't want to take on too much risk. We let price action and the trend do all of the talking here on the stocks channel, so we are not going to speculate on how earnings are going to go or how FOMC is going to go. We are going to let the price action do all of the talking, and we are going to trade according to what the price action is telling us. So I do expect this to be a very exciting week because there are plenty of catalysts with big tech earnings in the Fed's FOMC, so be prepared and have a solid trading plan and take advantage of the volatility. As long as you're setting your risk and using great risk management, this is the perfect time to be a trader in this market. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.